This is iBergamot with T-theory observations for January 2017, and this video will pick up where the last video left off with this chart. Please go to previous video from December 21st, 2016 to hear explanations for everything that's going on. I want to address just one issue. The issue with dates, as you can see, the projected date for January 3rd of this brown projection, as well as these February dates, they need to be adjusted because of how stockcharts.com, the charting service that I used for these projections, because of how they account for the future dates. The chart doesn't know when there is Monday off, so it counts all days, and we had some holidays in between, so these dates needs to be updated as follows. The last projected high from the brown T made from the lowest low in advanced decline line and the first peak in advanced decline line. That one projects January 4th now, right here. Now, it's important to understand that these dates are not exact, and there should be 10% give or take adjustment. So if we do January 4th plus minus 4 days, 10% of 41, which is a time span of this left side of the T, which is locked in, it cannot be adjusted. This is what happened. So the future dates we're not too sure about because of the holidays. But that one hit the high on S&P, hit the high 2 days later on January 6th. New York Stock Exchange hit the high on January 4th, and my portfolio hit the high on January 5th. And after that, by the averages, it seemed to be like a sideways correction, but there was nothing sideways about it. It was very volatile. Many stocks went up, many stocks went down. My portfolio was very volatile almost every day, but half of them up a few percent, half of them down a few percent, and very few unchanged in the middle. So the index masks a lot of volatility, and I think there is more to come. The new adjusted dates, projection for the tops or the bottoms made by the last low before the breakout in advanced decline line of all issues traded in stock exchange in red. That's the traditional advanced decline line. If we use the last low before the breakout for the center post, then the earliest possible projection comes on February 7, and then again on February 13, and then the final one on May 1st. Give or take some. The longest span of this brown T in this particular case is 60 days. So if there are some holidays in between, which I didn't check, it could be, beginning of March, plus minus 6 days, end of February. So it will go something like this, somewhere here, we don't know. It is important to understand also, and I'm not sure that it can be made as a rule, but there is often quite a lot of volatility around these projected dates. Some of them could be actually the minor low between two peaks. We've seen it in previous T's. I proposed in the last video that since there are no indications for January of any kind, there are no T-theory tops or bottoms for January, then we need to use other measures, and I did. And I sold some stocks and I bought some more, and I'm actually more invested than during the last video at the end of December. I literally have money for one position. I keep it just in case if, like when you fully invested, you see one stock that if you had money, you would buy it right there and then. Well, I have money for that one stock, and that's it. So I rather looking to sell something than to buy. And I'm looking to unload into this period of what I perceive to be heightened volatility that is coming in February up until the end of February. And I also want to find out, I want to point out this period. this period during December and first half of January, where advanced decline line of common stocks only, in black, right here, this one, it made kind of a sideways pattern, while the traditional advanced decline line continued to rise. I think that this analysis can be used interchangeably on both lines. So let's take a closer look at this period of, it's sort of like a period of rest in advance minus decline issues, you know, with this topping kind of area right here, and there are rising bottoms in black line, but not very pronounced. Let's call it a period of rest, not the cash build-up phase. Definitely, if people were selling something, they were buying something. If they were selling something, they were buying something else immediately. And this is exactly what I've been doing. The last low before the breakout, this is the breakout. And this is the last low before the breakout. And I sketched this chart a couple of days ago as it was happening in real time. I wasn't quite sure if it's really a breakout, but it's kind of higher now, and the market made a higher high. So I think it's in the bag. It's a small nested T. It is nested inside of the larger winter T. Traditional T theory by Terry Laundrie says that there are no nested T's, that they are myth, figment of your imagination. But lately I found that these shorter span T's, and this one only projects 26 days to February 27, unless there are a few days off, Mondays in between, which I didn't check. That could be a little bit later. But plus or minus 3 days, and we're already in March 1st. So I think market is in trouble comes March. Also, from one of the previous videos, this is a rate T projection. What it does is it takes 30-year treasury bond yield, and it says that it takes an equal time between high in yields to low in yields as it is from the low in yields to low in stocks. And this period comes February 27, the week of February 27. This is a weekly chart. And also it's not exact, plus minus 4 weeks, April 24, plus minus 4 weeks, and then in the summer. So I made this point before, minus 4 weeks, plus 4 weeks, minus 4 weeks, plus 4 weeks. This is all a period of heightened volatility, and it can go in a variety of ways. Who knows what kind of a highs and lows it will produce. But one thing is for sure. The further we get into February, the more I want to sell and the less I want to buy in order to have cash when the buyable dip comes. I will update these observations probably in the beginning of February to see how these early target dates come out, or as needed if I see something else develop. There is another thing that bothers me a lot. I cannot find any more T's that go past March. It's like we need a new cash build-up phase or some kind of a period of rest. And considering the political situation right now, I don't think there is a period of rest anytime in our near future. With that, until next time.